Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate income. My name is Matt, and in today's video I'm going to talk about the trades I executed that netted me $857 of premium. I'm going to talk about the covered calls and the cash secured puts. I'm also going to talk about one section where I acted like a clown and made a mistake. I'll definitely point that out. These red days, they keep going and going, but end of the day, that's part of the game we are playing. There's going to be green markets, but there's also going to be time where there's going to be red markets. And we're just in that period. Eventually, this too shall pass, and we will continue having our nice green days where our accounts look nice and thick. If you guys are returning subscribers, you know me. The first thing I like to talk about on the channel is my Robinhood account value. That's more so that whenever we head over to the spreadsheets, the numbers are relatively similar. So right now, currently the account's at $197,109.73. So now let's head over to the spreadsheets where I'm going to talk about the November 18th trades. Kicking it off with the spreadsheet, I'm going to highlight my clown mistake first. I should sign up for the circus for this, but going into November 18th, I had 300 shares of QQQ that I should have ran covered calls on. I only ran covered calls on 2 of them, and I forgot to run options on my $622 cost basis shares. This wouldn't have netted me a lot of money. I think it would have been somewhere between $50 and $70 if I ran a week long, but I do make mistakes sometimes, and I'm going to highlight that to you guys. However, the other 2 sets of covered calls I did relatively well in. So I had a buy-in point of 609 and a buy-in point at 606. So what did I do? Because the market was continuing to turn red, I was just going to take my money up front, and then hopefully by the end of the week, the market's going to turn around. So this is what I did. I chose a 609 strike price because that's my 609 buying point, and then a 606 strike price because that was my 606 buying point. Because the market's red, I don't like choosing a strike price that is below my buying point. And with that being said, I ran week longs for these options because I wanted to get more money up front. Because if I didn't do week longs, it would have been like $10 or $15 a day. But then by doing it as a week long, I made more money up front. So for my 609 strike price, netted $290. For my 606 strike price, netted $381. I will say I definitely waited, not on purpose, but I waited about 30 minutes after the market opened before I ran my trades. I set my alarm clock at 6:15 a.m. to run my trades, but then I slept past it and then woke back up at 7 a.m. So kind of a mistake on my part, but if anything, the market went lower after the bell opened, so I got these at a worse price, but I still made $290 and $381 for these 2 options. I can't really complain about that. QQQ opened at the $599.58, closed at the $596.30. Both of those options are still active, and I don't think they're going to be anywhere near assignment. So at the end of the week, I expect them to be expired as worthless. And then the other trade I ran is because I had a little bit of buying power available in my Robinhood account. So I decided to run another cash secured put on the QQQ. The premium was too juicy for me to pass up, and I also think that buying QQQ at these numbers is a perfect opportunity for you to dollar cost average and buy shares at discount. So what did I do? Excuse me. So what did I do? I ran a cash secured put at the $592 and bagged $186 of premium. This was a daily so 1 day of premium and 1 day of trading, that made me $186. I theoretically could have passed up this money and played the safe route of not running cash secured puts. We don't know how far the market's going to go down, but if you do the math, if you make an extra $100 a day off of cash secured puts, that's an extra $25,000 a year, and over a 30-year period, that's $750,000. So that's the one thing I want to highlight on my channel is being consistent in your trading is going to have a net benefit long term. Some people in the comment section have been reading, yeah, they're not doing cash secured puts, market's too volatile. This is the exact place and time you're supposed to be running cash secured puts, and you're supposed to be locking and buying more shares at these discounted rates. This is the exact moment. You're not supposed to be buying them when they're green. Just want to do a shout out reminder. Don't be afraid. The market could go lower, but guess what? At least you locked in shares at a better price. End of the day, like I said, this option expired worthless, did not get down to 592. So yeah, in total for November 18th, $857 locked in. Cannot complain about that. Let's head over to the other side of the spreadsheet and talk about the project State of the Union, where I highlight all of the metrics. Looking at the big hierarchy view, November 18th, locked in $857. when I updated the spreadsheet, the count was at 198,000, but after hours is slowly, trickling downwards. And then tomorrow I'll give you more accurate numbers. But in total, since trading my own options back in April, if you guys haven't been following my journey, I used to be invested into high income ETFs with the promise that, hey, somebody could run options for you and do a better job than you. That was a fallacy and a lie. Running your own options is a lot more net benefit. And guess what? You can run it in a way that there's no NAV erosion. And this is the way you run covered calls and cash secured puts. Don't sell below your cost basis and invest in good investments. And then you're golden. In the last 7 to 8 months of my own trading, locked in at $69,856. I'm almost at $70,000 in only 7 months of trading. That's absolutely wild, right? And then the second that the market recovers, my account's going to blow past, what the previous highs were at. So once all of my cost bases go back to their normal trading average, this account is going to be at 225,000. I will say owning Tesla, that might be a gamble, but at least for my QQQ shares, I have faith that they will recover. So let's take a look at some of my trade winning percentage. From my strategy, I'm winning at 98.69% of my trades, had 151 winning days, 2 losing days, and I'm averaging about $456 a day. If you look at that as a weekly number, I'm averaging about $2,183. And as a monthly average, that's about $8,635. Absolutely wild. I actually need to update this number to an 8 and then change this to a 0.2 because I keep blowing past my normal weekly average. Because in 2025, I am not going to be trading for a 12-month span. I decided to project what a 12-month return would look like based off of my account's trading performance. And if I were to do this for 12 months based off of my weekly premium, multiply that by 52 because there's 52 weeks in a year, I should be making somewhere around $113,000 a year just locking in premium and wheeling and dealing that way. Also need to highlight and update this number. Man, I've been sloppy. But if we look at that as an average yearly percentage, that's about a 76% return based off my initial investment. And from some of the money I brought in from 2024, and then I'm throwing in some of my own money, the value that I'm basing my cost basis off or basing my account off of is 150,000, and we're at 200s relatively easily. So everything is trending in the right direction, even in a red market, a little 5-7% correction, we're doing just fine. So let's head over to how much premium I've made this week after 2 trading days. All right, guys, looking at the week of November 17th, after 2 trading days, we locked in $2,429. So I'm really happy about that. We've hit the 4-digit club 11 weeks in a row. And eventually, I think 5-10 years from now, that 4-digit club is going to turn into the 5-digit club really quick. And then the months are then going to turn from the 5-digit club to the 6-digit club. Let's highlight how much money we've made for November. In November, we've made $9,417. And that's why I love this strategy. Even in a red market, we're locking in premium upfront, right? And then the second the market recovers, our accounts are going to be looking nice and thick. We're also buying shares at discount so that once they start going up, our trajectory is just going to blow through the roof. So I'm definitely excited for when that turnaround happens, but nobody has a crystal ball. I can assume, I can guess that, maybe by December, markets are going to look green. Hedge funds are still doing their tax loss harvesting. Anybody can insert any reason, but end of the day, it doesn't matter until the chart changes. So until that point, we're just waiting. But the only thing we can do is maintain our consistency trading. I've been getting better and better with my trading, as you guys can see from when I first started back on, April 7th, week of April 7th to what is now. You can see that my average weekly premiums are getting higher and higher. And as I've highlighted earlier, we are close to $70,000 on the year. And we're closing up on 8 months of trading. I just need $140 more, and then I've made $70,000. I have made more money trading 15 minutes a day than somebody working 8 hours a day, at a middle income job. That's insane. Yeah, guys, I'm pretty excited about that number, but I'm excited about it. It's cool to see, but I don't base my trading off of a metric. I'm just trading off of philosophy. And the more I'm getting better at my own emotion and my own trading philosophy, dilating in when deciding when to run, week-long options versus dailies. That's what the key point is here. And so far, I think I've been doing pretty good for only doing my own covered calls and cash secured puts for 8 months now. So let's head over to Robinhood. I'm going to talk about the trades I plan on executing for tomorrow, and we're going to wrap up the video. Now that we're back at Robinhood, guys, I'm going to run 2 trades tomorrow. One is going to be another cash secured put. The one I ran today is expiring worthless, but I locked in that $186 of premium up front. So I'm just going to rerun that same thing, but we'll see what the share price is in the morning, and then we'll base it off of that. And then I still have to run a covered call on my 622 buying point. And I'm not going to choose a strike price lower than that because I don't want to risk getting it assigned. So let's look at what the premium would look like at the current trading condition. So heading over to QQQ, currently it's at the 595. Man, I do hope it starts recovering soon. But end of the day, I'm not too emotional about it. It will go up when it will go up. Looking at the expiration, it's still showing as today. So let's change that to tomorrow, November 19th. Let's look at the 622 because we're going to talk about my 622 buying point. With where the market is currently at, if I ran a daily covered call on my strike at the strike price 622 because of my cost basis is 622, I'd make $1 premium. That to me isn't even worth running the option. So let's just change that to expiration on Friday and see what the number would look like and if it's better. So heading down to the 622 strike price, if I were to run this option tomorrow, I would make about $37 of premium. So if you were to ask me $1 versus $37, I'd rather take the $37 because there is no guarantee that the market will recover tomorrow or get anywhere near 622. So I'm just going to take this money up front. I'm basically chalking up this week as a loss. Hopefully by the end of the week, we're going to see some sort of upward trajectory, but there's no guarantee. I'm going to lock in this premium at $37. So that is my 100 shares of QQQ. And depending on what your buying point is or your cost basis, you would just do the same thing. If your buying point was 619, then run an option at, the 619, making $63 and vice versa. But now let's look at what a cash secured put would look like. I'm going to continue running these as daily. So I'm just going to remind myself to throw this back as a daily. November 18th is pretty much over, but so I'm going to choose November 19th as my new, my expiration date. Market 594.58. Man, it just keeps going down. And tomorrow, because I would say this, today I ran a strike price at this 592 for my cash secured put, and I made $186. If tomorrow market's still looking red, I'm probably going to choose something a little bit lower. I might go down to even this 585. Not even looking at delta. That's more so just a premium. This is more so just, I want the upfront premium. This is nice enough. It's about $10 away. If I can get these shares assigned at $10 away from the current price, I think that's a massive steal. So it's a win-win. Lock in $136, get a better price of QQQ. What's not to love? However, I will say this, usually when the market is neutral to green, I usually choose a delta of 0.2 to 0.3 for my cash secured puts. When it comes to covered calls, if the market is green, I'm usually choosing a strike price that's about $1 or $2 away from where the market is trading, as long as it is above my cost basis. Below my cost basis, then rule by default goes to whatever your buying point was. That's where you run your strike price. But if the market's green and it's above your buying point, then sure, I usually choose $1 to $2 away. Usually side on $2 because the premiums are pretty good. And then also locking in, $200 off of, 4 contracts. That's $800 a day. If that hits, if it doesn't hit, then guess what? You made a good amount of premium upfront. That's just my thought process, guys. Hope you guys learned something new in the video. Maybe not something new, but just I want to highlight the point of consistency. And even in red markets, I'm still doing the same things over and over again, not selling below cost basis, still investing in good investments. And if the markets continue going red, I'm swapping over from my dailies to expiration dates that are now weeklies. That's pretty much it, guys. Hope you're doing well out there. Hope you are doing well out there. Hope the accounts are doing pretty good or as good as they can in a red market. Stay harvesting, Matt out, and I will see you in the next video.